Welcome back, investors. When most people think about investing, they picture stocks, bonds, or maybe mutual funds. But what if I told you there's a whole universe of opportunities outside of traditional markets? Today, we're exploring alternative investments, what they are, why they matter, and how they can diversify your portfolio. From real estate and private equity to art, crypto, and even farmland, this is where wealth meets creativity. Let's dive in. Alternative investments are any assets that don't fall into the traditional categories of stocks, bonds, or cash. They can include real estate, private equity and venture capital, commodities like gold or oil, cryptocurrencies and blockchain assets, hedge funds, collectibles like art, wine, or rare cars, infrastructure and farmland. Why are they called alternative? Because they tend to behave differently from traditional markets, offering unique opportunities and risks. Here's the big question: why should you care about them? Diversification: when stocks go down, alternatives like gold or real estate may hold steady or even rise. Inflation hedge: assets like real estate and commodities often perform well when inflation eats into traditional investments. Higher potential returns: private equity, venture capital, and crypto can offer massive growth, though with higher risk. Access to unique opportunities: imagine owning part of a startup, a piece of farmland, or even a rare collectible. These aren't things you can buy on the stock market. The wealthiest investors in the world allocate a significant portion of their portfolios to alternative assets. Why? Because they know it's a way to balance risk and unlock new growth. Let's break down some of the most popular types of alternative investments. Real estate. One of the oldest and most trusted alternative assets. Investors earn through property value appreciation and rental income. Today, you can invest directly by buying property, or indirectly through REITs, real estate investment trusts. Private equity and venture capital. Investing in private companies or startups before they go public. High risk, but if you back the next big company, the rewards can be massive. Usually accessible through funds rather than individual investing. Commodities. Gold, silver, oil, natural gas, and agricultural products. Known as safe haven assets during times of market instability. Cryptocurrencies and digital assets. Bitcoin, Ethereum, and other blockchain projects. Extremely volatile but increasingly part of institutional portfolios. A brand new category of alternative investing that blends tech with finance. Hedge funds. Pooled funds managed by professionals using advanced strategies. Often aim to generate returns regardless of whether the market goes up or down. Usually require high minimum investments. Collectibles and luxury assets. Art, classic cars, fine wine, rare watches, even trading cards. Not just hobbies, some have outperformed traditional investments over decades. Farmland and infrastructure. Investing in farmland, toll roads, or renewable energy projects. Provides steady returns and often protected from stock market swings. Before you jump in, let's be real: alternative investments come with risks. Illiquidity: many alternatives can't be easily sold, unlike stocks. You may need to hold them for years. High fees: hedge funds and private equity often charge steep management fees. Complexity: understanding valuations, risks, and timing requires research. Volatility: crypto, collectibles, and even commodities can swing wildly. That's why most experts recommend alternatives as a smaller percentage of a diversified portfolio, not the whole thing. The good news? Thanks to technology, alternative investments are more accessible than ever. Fractional ownership platforms, apps let you buy small shares of real estate, art, or even luxury cars. REITs and ETFs, easy ways to invest in real estate and commodities without owning them directly. Crypto exchanges, platforms allow you to buy, hold, and trade digital assets with low barriers to entry. Crowdfunding platforms, sites where you can invest in startups or private companies with smaller amounts. The key: start small, learn, and diversify. So where is this heading? Experts predict that by 2030, alternative assets could account for over $20 trillion globally. Technology, digitalization, and democratization are making it easier for everyday investors to access what used to be reserved for the ultra-wealthy. Imagine owning a fraction of a skyscraper in New York, a stake in a promising AI startup, or even digital art secured on the blockchain. The future of investing is about choice, and alternatives are leading the way. Alternative investments are not just about chasing returns, they're about expanding your horizon, protecting your wealth, and exploring opportunities beyond Wall Street. The question is, are you ready to step outside the traditional path and discover the future of investing? Thanks for watching. Don't forget to like, share, and subscribe for more deep dives into the world of smart investing.